time for our 360 round. We're taking a look at Palantir, that has surely been a winner in 2024. To discuss this and more, Dryden Pence is with us, Chief Investment Officer at Pence Capital Management, and Jordan Berger, analyst over at Third Bridge. Thank you both for being with us. So, Dryden, I'll start with you. We've been watching Palantir, PLTR, the ticker symbol there. It is down about 5% today, but has been a winner. What do you think about when you think about Palantir for the big picture?
Well, I think your important comment is the big picture. When you think of Palantir, you think very long term. This is a company that, we like companies that are at choke points or have strong competitive advantage. And this is a company that allows people to really visualize data in different ways. And that's why they're very strong governmental contracts. They allow you to basically take data and information and convert it into intelligence. That's actionable intelligence. And I think that that's very, very important. They've been quite successful with the military and familiar with that thing. But now the big picture is, how do they monetize that in a more civilian world where they can go B2B, where they can go beyond just being a governmental contractor and be really a company that is more dominant in data visualization for everybody, whether it's AI, whether it's any type of security systems or any type of data information. That's going to be a big question. How do they make that full transition from a primary government contractor, the contractor, to everybody? Long term, we like it. When you think about it right now, you have a company that's probably shot up a lot, and valuations are a little lofty at this point.
Investors, brokers, and financial gurus are buzzing with the latest game-changing news in the stock market. Two technological titans, Nvidia and Palantir Technologies, seem to be cruising along an express lane to extraordinary growth. This tumultuous yet exhilarating landscape of shares and dividends now centers around their groundbreaking advancements and strategic moves. Onlookers have witnessed Nvidia's compelling foray into AI chips and Palantir's alchemic transformations in enterprise AI software, both setting new high watermarks and turning heads across the financial world. So in today's video, we will discuss why these two stocks are a must-buy at the moment. But first, if you want to keep up with Nvidia and Palantir latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
And maybe it moves with AI and Mag 7 too. I mean, for example, Google's down today after its quarterly report. That too could be dragging this name down. Do you see growth potential, Jordan, for Palantir going forward? And are you worried about the valuation?
Yeah, hi, Nicole. Thanks for having me. It's interesting tracking the story of Palantir right now. As mentioned, they've really cut their teeth in the defense sector, moving into the commercial market, really at a nexus in their story, considering they were working on doing so prior to the generative AI boom. So moving towards the AIP platform and seeing how that's been picking up has been of great interest to us. We speak with experts as often as we can every day to try to get a sense of how that traction is picking up. And it's really, at this point, looking at just the use cases, the initial boot camps that are being used by customers and how that's really picking up. So as long as we keep seeing those use cases coming in, I think that does bode well for the company's ability to make that pivot.
The juggernaut of AI chips, Nvidia has undergone a staggering ascension driven by prodigious growth in its data center businesses. As a primary provider of AI-centric chips for cloud services and research, Nvidia isn't just dabbling in innovation. It's bathing in the booming demand for AI technology. Their GPUs, originally designed for the flashy world of video games, have transcended their initial purpose and become indispensable tools in artificial intelligence research. The recent climb up Nvidia's stock ticker might have left some assuming it's a serene journey, but history tells a far more vivid tale. Chip demand is inherently cyclical, and Nvidia has ridden this roller coaster several times over the last decade, most notably in 2022 when the stock took a nosedive, slicing its value in half. Yet the talent at the helm, notably co-founder and CEO Jensen Huang, has artfully navigated these choppy waters. To grasp Nvidia's dominion, consider its clientele, the trifecta of cloud behemoths, Amazon Web Services, Microsoft, and Google. Each of these juggernauts has ventured into AI chips, but cannot match the general-purpose processing prowess of Nvidia's advanced GPUs. Just last quarter, Nearly half of Nvidia's data center revenue streamed in from these top-tier cloud companies. Acknowledging that its reign in AI chip supremacy is bound to attract fierce competition, Nvidia has upped its game in launching new chips at an accelerated pace. Currently, customers are transitioning from the acclaimed H100 GPU to the innovative H200, with yet another product slated for release later this year. The anticipation for its upcoming Blackwell GPU platform is nothing short of electric, with demand reportedly outpacing supply even before its debut. According to Nvidia's most recent earnings call, Wall Street analysts are abuzz, predicting the Blackwell GPU will propel the company's revenue beyond consensus estimates. But anyways, Nvidia is not the only hot stock at the moment. There's another soaring player in the AI game, Palantir. But why? Hello everyone, and welcome back to Investocracy.
Nvidia is the biggest of the tech companies, or one of the biggest. Stock's up over 125% so far this year. We've seen that pull back from all-time highs above $140 a share, Alex. So, maybe some profit taking, maybe some caution as the big tech rotation trade takes out. But I haven't seen anybody come out and say, hey, we expect, slower growth, or, we're not going to have an earnings beat at the end of August.
Yeah, at some point, though, this has just been a name that the run's been pretty extreme. Maybe a little bit of a game of kind of musical chairs or hot potato, where it was sort of, hey, as long as it's keep going up, I'm okay increasing the risk. But the second it turns, maybe the confidence that this has maybe gone a little bit too far, maybe the expectations gotten a little bit too high. Consider, it's not just beating today, it's not just beating by a lot today, it's basically doing this into perpetuity to maintain, a 40x multiple when you're a $3 trillion company. Now, granted, it's not a $3 trillion company anymore, it's come down a lot. $27. We're talking about a lot of outstanding shares when it comes to Apple. You're looking at every single dollar being $24.6 billion in market cap for Nvidia. So it's a huge, huge number that has been basically taken out of the value of this company just in the last few weeks. But it does seem that while we're not necessarily working at an extreme pace lower, these dips that are being bought are lasting less and less time lately.
Right.
This is similar to what you're seeing in the overall market, but I think it begins and ends here. The stock has had a couple big gaps lower. And it's certainly been met with buyers. That makes sense. It's been the winner in the market. There's going to be a thinking of, hey, this is an opportunity to get into this name. But we're quickly, and we saw it yesterday. I mean, the stock traded down to 106, and it was like a snap of the finger. It lost, $250 billion in market cap. Now, granted, it came back, but it was unable to take out yesterday's high today. It fell from that level right at the open. Mm-hmm. Even as the market is making new highs intraday, Nvidia is still a good $3 off its highs intraday. So I do think there's been a sea change here.
Right.
Doesn't mean it's going to go down to double digits. Maybe it will. And maybe earnings will have a part in that down the road, but we don't hear from them till the last week of August. Perhaps increase of implied volatility, sideways trending name. Oftentimes that's how breakdowns happen. Start by going up, then you go sideways, then you go down. Maybe perhaps if there's going to be either a breakout or breakdown, maybe we have to have a sideways phase first.
A new era of enterprise AI software. Just as Nvidia has etched its mark, Palantir Technologies is charting an equally impressive trajectory. The company's shares surged 63% over the past year, fueled by a rising demand for its enterprise AI software platform. Palantir's software isn't just a digital tool. It's akin to a Swiss Army knife for modern enterprises, serving diverse needs from military operations and supply chain analytics to investigating financial crimes. Situated at the intersection of technological innovation and governmental reliance, Palantir earns over half of its revenue from U.S. government contracts. However, this does not paint the full picture. While governmental expenditure might be the lifeblood that validates Palantir's capabilities, budget constraints also impose considerable limitations. Yet, Palantir is undeterred, aggressively pushing to diversify its revenue streams beyond the signatures of federal contracts. U.S. commercial revenue for Palantir grew 40% year-on-year, marking an impressive $150 million and nearly quartering the company's total business intake. Innovation in commercial applications isn't just a sideline, it is becoming a cornerstone of Palantir's growth narrative. Management is optimistic, expecting U.S. commercial revenue to swell by 45% in 2024. This, in corporate parlance, is not just growth. It's skyrocketing expansion. Moreover, Palantir's knack for innovation extends to operational dynamics. Deal cycles have notably tightened, with some clients sealing deals merely days after initial trials. Expanding their reach beyond federal confines, Palantir aims to partner with local governments, academic institutions, and researchers, accentuating its untapped potential. In terms of financial performance, the latest quarterly report spotlighted a record net profit of $106 million on a $634 million revenue. Wall Street prognosticators now foresee the company's earnings to burgeon at an annualized growth rate of 22% in the upcoming years, a promising forecast as business demands for AI software soar. So what does this mean for the two stocks? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Right. You know, I have to say, most of the guests that come on still like Nvidia for the long term. In fact, one who came on yesterday said, you know, I wouldn't buy even AMD. It's like Nvidia's little brother, and forget it. Like, you know, if you're gonna buy, still go for the biggest and the best. Don't try and buy AMD because you think it's less or whatever, you know. But the group, AI, we still need everything, right? I mean, would you buy the SMH? Would you buy some of these names for a year or 5 years and hold them?
Yeah, I think we forget that this is a symbiotic relationship. AMD, Intel, ARM chips, so Samsung, Qualcomm, those traditional players in the data center space, GPUs don't work upon themselves. For every 4 to 8 NVIDIA chips, you're going to sell 2 to 4 traditional data center chips. So Intel Xeon, AMD Avid, the Snapdragon is and Qualcomm is making a big noise. These AI PC chips that Dell, HP, Lenovo, they all release these on the client side, these chips that are competing really well with NVIDIA. I still like NVIDIA. There is no substitute for NVIDIA for the big training use cases. Those are going to continue for the next 2 to 3 years. But as enterprises start to ramp up their need, they may not need a H100. They certainly won't need 100,000 of them. So where's the opportunity beyond NVIDIA is the good question.
For the investor attuned to market ripples and waves, the siren call of Nvidia and Palantir is growing too potent to ignore. Nvidia's seasoned maneuvering of AI chip innovation, combined with Palantir's adept broadening into commercial and governmental spheres, heralds a new dawn in growth stock investments. Considering the current state of Nvidia, analysts project that its earnings could spike at an annualized rate of 33% over the forthcoming years. Although this isn't quite the triple-digit growth of the past year, it's a formidable pace that positions Nvidia for lucrative, long-term returns. To keep pace with their fervent demand and innovation cycles created by the need for AI technology, it surpasses any wild fluctuations the chip market might throw its way. On the other hand, Palantir's future gleams with promise, characterized by innovative software solutions that span from defense to diverse commercial applications. With solidified governmental ties and a burgeoning U.S. commercial revenue segment, the stock is poised for a potentially rewarding trajectory. Their plans for scaling operations to new sectors and global markets forecast an inviting horizon for growth-minded investors. In closing, what are your thoughts on Nvidia and Palantir's trajectories? Are these stocks aligned with your investment strategies? We welcome your insights and predictions as these corporate titans continue to carve their paths in the financial scape of the future. In the ever-fluctuating world of stocks, one thing seems certain. Nvidia and Palantir are making more than mere headlines. They're setting the stage for the next era of technological advancement and stock market success. Finally, if you would like to know what companies like Nvidia and Palantir have been up to these past few days, go ahead and click on the next video on your screen. See you there.